a stock that has reported today. It is our stock of the day, SEK. It has narrowed its FY26 guidance to the upside after improving yields in the first half. It says AI-enabled ads and an outcome-based pricing has increased its yield, offsetting a decrease in volume caused by macroeconomic conditions, and its freemium offer. SEK still recorded a loss of 178 million in the first half due to a previously declared loss in value from its investment in a Chinese jobs platform. It's now targeting between 195 and 215 million in adjusted profit for the financial year of 26, and a distributor record 27 cents per share dividend. Shares slightly negative off the back of that report. Let's see what our experts think. Andrew, now once again, AI is a feature here, particularly as far as the threat it poses perhaps to its business model. We've spoken about these other platforms too, the car sales, the real estate.coms of the world, and whether AI is a real threat or are we seeing potential?
Yeah, great question. Look, I think it's worth remembering that SEK, car sales and real estate are the old Rivers of Gold newspaper classifieds. And in the same way as it wasn't technology that wiped out the newspapers per se, it was the loss of those Rivers of Gold. That's the real risk here, is that AI somehow takes away the Rivers of Gold from the network effect that the current occupants have. Of course, the irony in the case of the newspapers is we sort of think about the death of the newspapers, but the companies that own the newspapers, being News Corp and Fairfax here in Australia, of course, actually make more money now from their online classifieds business than they ever made from their print classifieds business. So from that point of view, again, it's a question of, where do you think that will fit? I think what's interesting about SEK though is of the three classifieds, online classifieds businesses, it has by far the worst stability of earnings. And that's because it's the most exposed to market movements. You're selling or buying homes regardless of the interest rate. What matters is the price of the home. And so from an REA point of view, they can charge you the same. The same thing with cars. The challenge for SEK, of course, is there's only one side of the equation that they can charge, which is the employer placing the job ad. And as there are more or less jobs in the economy, so too does the number of job ads and the price people are prepared to pay to fill them. So at the moment with low unemployment, it's no surprise that revenue was up 20%, EBITDA up 20%, adjusted profit up 35%. But then if you look at their major investment in China, you're just seeing the opposite, which of course with the Chinese job market shrinking, there's a big impairment. So I think the challenge for anyone at Teaminvest or from our way of looking at SEK would be to say the stability of earnings makes it impossible to predict its long-term likely performance, and as such we would stay away. But it is part of the three Rivers of Gold. I'd prefer REA and car.
Mathan, how do you see it?
Yeah, it's an interesting one, because if you look at the job market, you would think it's, historical terms, we have a very strong job market, and that's around the world. So you would think that SEK should be doing better. And so it is interesting where we are, but the market is now pricing in a few things. One, there's competition, AI effect. It comes down to there are certain sectors where AI effect will have an implication, but it's not going to happen tomorrow. SEK is still going to do quite well in the short to medium term. It's going to take a few years before those things start to bite. But it is interesting that it's come off, and Andrew's right in the context of the old techs, REA and Car Group now, and SEK. And all of them are great businesses, and a lot of old school fund managers, growth fund managers, been riding those three all the way, and that's been a great play. But in Australia, we've had a growth to value rotation for nearly 2 to 3 years. In the US, that started to play out over the last 3-4 months, and we are seeing this dramatic hit on tech stocks and growth stocks during that time. Not really a surprise. And if you look at where NASDAQ is, I mean, you barely see a pullback of 1%. It's a tiny, tiny move. So there's a lot more to come out of the growth stocks. The problem is obviously where the bond yields are, the economic cycle is. So growth stocks are going to struggle. In the Aussie market, the growth stocks have taken a fair hit. And they tend to be a leading play, and the rest of the world plays catch up because we're mostly a value market. So in that context, I think the sentiment for growth stocks is going to struggle, and I think SEK continues to struggle. And the problem is going to be we're probably going to see weakness in global growth spreading, and that means employment markets inevitably is going to get harder, and that means SEK's outlook will get weaker. So for me, I'm not trying to pick the bottom in SEK. It's a cyclical. You sit back and watch. There would be a time to buy, but that's not today.
Or sell it.
Yeah, look, it's a bit tough one. It's a high quality business. You've already taken the pain, so I wouldn't sell out. It's a hold, but I wouldn't put fresh money in it.
That is our stock of the day. No, Andrew's not interested. Mathan would hold it. SEK.